you heard David Einhorn's comments. He's not alone. There are a lot of folks out there who still believe the inflationary story is not yet done. What are the markets to do with this kind of data if we know that there could possibly be further inflation down the line?
Morning, Dom. Thanks for having me. Yeah, I think, investors have a couple of routes to go. One is to dig into that thesis and really believe, which could be quite possible, that, inflation is, not done and the Fed has more work to do. I know the pricing in the next hikes are starting to shift towards 50 basis points. But, there's also another side of the coin is the data that we saw that came out for January was quite robust, and that could be partly a part for seasonality, different things in that nature that were way above expectations. And so maybe that normalizes or continues its trend, obviously, downwards in the next set of data that we see, which was why March will be very, very pivotal for the markets, especially in the short term, because I do think we still have a little bit of upside potentially as we go into summer.
Delano, the word that I heard a lot over the course of the last, say, 6 to 9 months, maybe even a year, that I don't hear as much anymore, but I'm starting to hear a little bit more now, is stagflation, right? This idea that you could still have inflation despite a flagging and in some cases perhaps even recessionary economy. Is that a real threat? And is that the reason why the markets are seemingly in this churn mode right now? They can't seem to find a catalyst for a direction one way or the other.
Yeah, Dom, I think that is a threat. And I think, for the markets pulling back, potentially that churn that we're seeing could be potentially some of that being priced in. Obviously, some of the data we saw last month being priced in. I do think on the one side where I think is that we had some bright areas, especially is the past earnings season, is the fact that guidance for some of the companies, as you just showed what Salesforce did, had a hard time during 2022. They're trying to make that turnaround. Guidance for companies was a little bit better. We did see companies do a little bit better on their cost. We also saw companies that are now focused on how to, deal in an environment where demand could be dwindling. And so if we get in a stagnation environment, would probably be the worst case scenario for stocks and obviously for Main Street and everyone in this country. And that's something that I think, we can avoid if we continue to see companies do well in this environment, which a lot of them, surprisingly have done better than we expected during this earnings season.
You have a favorite pick that you've seen so far this earnings season? Anything that's bullish for you on to take that stock pick as opposed to 5% yields on a one-year treasury?
One, I think investors are 5% yields on a one-year treasury. You should have some of your money getting, risk-free rates that we haven't seen in a while. But I think investors that are still looking at equities and still investing, look at what mega cap is doing. Look at what some of the they call it the value stocks are doing as well. I actually thought it was interesting the move that Alphabet's made. Alphabet took a little bit dive with their introduction of their AI, and I think some of that re-rating there's some upside there just because of the dive that they took. And as things kind of the hype of things died out, you'll look at a company that's been doing incredibly well over the past obviously for a while. So those are areas where you want to look at the valuation being really re-rated, where you think if you're holding this longer and things get a little bit better past inflation, past rate hikes, that you're holding a quality stock.